Hey David, you how you doing? If you guys can, sorry about that. Can you just let me know how the audio is, if it's too loud, too soft, or whatever it might be? Appreciate it. Joshua, how you doing? I think first time I've seen you and David here. Welcome aboard. XMD, same also. First time I think I've seen you here. Dan as well. Um, haven't seen you guys or your names before, so thank you. Appreciate you being here. Um, so again, yeah. Okay, great. Sounds good. Appreciate that. Appreciate that. We got a little bit of a late start. I mean, I was flipping through the news and just can't keep up. There's so much going on in every facet of anything and everything. But appreciate you guys being here, and I'll get started with the show. And again, thank you all for being here. Hello again, everyone. My name is Patrick Beer, and I'm the host of Silver Bullion Television, SBTV, and I'm glad you all could make it here. So again, just want to welcome people. Robert, first time I've seen you here. Welcome aboard. RR, the stalwart. Welcome aboard again, my friend. Good to see you. Uh, you trips for free. Glad to see you, Mr. B, Paul, and a lot of new names. I appreciate you guys again coming on board and joining the live stream. I gotta admit, I about midweek, I start going through news, trying to pick a topic and then do some research on it. And the way the news is moving right now, it's as if almost anything you do just it gets thrown right out the door. It becomes old news in 5 minutes. And so I appreciate if you guys could just bear with me a little bit because it's going to seem like what just happened on Wednesday, Thursday, Friday is going to seem like it happened a decade ago. The way news is moving, but I appreciate you all being here. And again, if you are new to this channel, please do subscribe and click on the bell to be notified of new updates, and give us a thumbs up if you like what we do. The thumbs up really do help out a lot. Lately, there seems to be words that if people use, somehow they get demonetized from YouTube, and so the thumbs up, what they help is as far as being recommended in someone's suggested videos feed. So that's where the thumbs up really do help us out a lot, and we really do appreciate that. You can always find us on social media. Our website is silverbullion.com.sg. Once again, SG because we are in Singapore. Silver Bullion SG on Facebook. Silver Bullion PL for Private Limited on Twitter. If you want just the audio versions, you can find us on bit.ly, bit.ly, SBTV iTunes, or SBTV Spotify. And I do hope you join our crisis tracker group, where if you do have the app Telegram, go ahead and join our group, Crisis Tracker. And here we go over some news articles that we feel is pretty relevant as far as to the economy, the silver, gold, things like that. So it's always good to stay informed with what's going on right now. Again, things are just moving way too fast. So heading over to our website, let's go ahead and take a look at the silver and gold price right now. They've been just getting creamed, but it's okay. I think a lot of us out there were adding to our position. We all knew that it's more than just an investment. It's more than just the price. And we are going to need this as time moves on. Silver, 1266 USD. Gold, 1492 USD. And that silver gold ratio is at 117.9. Hang on, let me see if I can get this a little bit bigger for you guys. Okay, yeah. So that's where we're at with the ratio, 117.9. I think last week we even went into the 120 range, where we saw silver at 120 to 1, where 120 plus ounces of silver equals 1 ounce of gold as far as price. But in value, these they do hold a different role to play as far as the value, meaning wealth protection, wealth storage, things like that. So it's something. The price sure can be a little bit demoralizing sometimes, but we are seeing the true physical price, or I shouldn't say true, but the physical price is breaking away from the paper price. We are seeing that, and we'll touch on that a bit. So again, Jeff, welcome aboard. Roger, Bill, Parry, Lego, Michael, welcome aboard. Robin Stabil, good to see you also. Thanks for coming on. American Rebel, good to see you. Polynesian Pip, aloha. Jeffrey Tan, good morning. Good morning. Thank you. Thanks. Everybody's in a different time zone. So for some guys, good evening. For some guys, good morning. For some guys, especially in Europe, if you're up at this time, um, don't be panicking about things too much. If you're on home quarantine, we'll try and entertain you. Hang in there. We're going to get through this thing together as best we can, however we can. So hopefully I can entertain you guys who are at home quarantine. Um, Always be funding. Thank you. Appreciate it. Appreciate it. It does take a lot of work, and sometimes, as I mentioned, you find a topic, you dig deep into it, research it up, and then it becomes old news. Everything's moving so quick. Bill Parry, bank runs, absolutely, absolutely. When this thing first came about, I've been telling my family, I've been telling them pull some cash out, and the reason being, you may see these bank runs, and I think we all know we've been through this quite a bit, where there's only so much physical cash in the monetary supply. The rest is all digital. And if you're thinking, well, so what if it's digital? I mean, I can just make credit card payments, buy things online, this and that. Well, if it's digital, it's in control of the bank. If it's physical cash with you, it's in your control. That's the difference. It's a very big difference. So yeah, absolutely, bank runs. I've been seeing them creep up, so it's good to have some cash. David, you have Chuck Norris ran into the virus, and now the virus is quarantined for 14 days. Yeah, well, Chuck still got it, man. He's still got it. Wonder what happens if that virus runs into Arnold. Maybe he could terminate it or something for us, right? Arnold's still in some pretty good shape too. Um, Paul M. RCM shut down. RCM referring to Royal Canadian Mint. You know what, Paul? I'll check on that with the guys back in the office later on. I'll ask them about it. And I know we've been hearing things about the three refineries in Switzerland. Switzerland is going through its lockdown as well, where Valcambi, Pamp, and Argor Heraeus. These three refineries, we've been hearing, um, they're slowing down, capacity slowing down, whatever it might be because of the lockdown. I'll check on that as well. As far as I know, I did ask our man Claudio Grass, who we did interview. Follow him on Twitter as well. He's always got good info. He mentioned that they did not shut down. It's just that they may be producing less, and definitely maybe producing less in the future for now. So um, what can I say? Silver shortages, getting a little bit more difficult to get silver, and of course, it was going to trickle in over into gold. So hang on, things are getting pretty wild. Always be funding 6 to 8 over spot wherever you go. It is, and I'll get into that a bit. Just to try and open up a little conversation where we can talk about this. Um, so I don't want to do this, but I have to. I'm going to have to take a look at the Fed balance sheet. Remember, we've been talking and we've been saying, if these things keeps up, especially with the repo market and whatnot, by the time it gets to March, April, we're going to be right back where we were. And taking a look at that Fed balance sheet, there you go. Before they started to unwind, they were at about 4.4 trillion. Now they're at 4.6, I believe. Yeah, 4.6 trillion. So it's we talked about that V curve. It's not going to be a V curve. It looks like it's going to be that infamous hockey stick. I think that's what we're going to be looking at. And Fed repo market. I mean, I think you folks, all know how bad that's getting already. So I want to go ahead and take a look at some of the items that I found on Twitter that I went ahead and bookmarked. Lisa, let's just leave it at Lisa. She says Congress is looking at allowing the Fed to buy corporate debt. Uh, this is true. I would click on this article for you guys, but I ran out of my 3 free Bloomberg articles per month. So Congress is likely to pass legislation tomorrow, clearing the way for more emergency action from Federal Reserve. You know what that means? More money printing, right? Luke Groman, definitely follow his feed if you are not. Get on board with what Luke says. This guy is he's I want to call the guy a genius, but he's too humble to accept that. Very very smart guy. Luke tweeted out when the Fed creates currency, it simultaneously creates both an asset in cash reserves and a liability, being the Federal Reserve note. It means the Fed's balance sheet is infinite, and I think I just showed you that here with this hockey stick. It's infinite. It's fed to the moon, and so that was what Luke Groman had to say. What will hold confidence in the U.S. dollar as this happens is inflation in the gold on the Fed's balance sheet. Wherever that gold is, we're going to find out. I mean, we talked about it before a little bit. Is it important box? Is it on the Fed's balance sheet? Central banks for sure have been buying a whole lot of gold. But I think for us, we need to get some of that gold in our pockets for sure, without a doubt. Mr. Groman also says the offer side, and this is recent news as well, 10 hours ago, the offer side of the stimulus package financed by the Fed is growing faster than the virus. This was 1 trillion a few days ago. And this is exactly what I mean, where the news becomes old news in a matter of minutes, much less days. And now we're seeing that the Fed will make up to 4 trillion, 4 trillion in loans to businesses to rescue economy, Duchin says. And this was an article that came out in Market Watch. Maybe we can go ahead and click on this. Market Watch, they're pretty good. I like the fact that they don't ask you to pay for things. And I think the guys that keep asking you to pay for things, I think in the end they're going to lose out because everybody's just going to go to the free stuff. And the free stuff, these guys, what they offer is just as good as the guys who want you to pay. So I think these paywalls, may not be a good idea for the Bloombergs and such. Nonetheless, Fed will make up to 4 trillion in loans to businesses to rescue the U.S. economy. Treasury Secretary says Fed will play a key role in helping businesses hurt by coronavirus. Mnuchin, the Treasury Secretary, said just today, this morning or this afternoon, that the Federal Reserve will play a key role in lending funds to businesses hurt by the pandemic. Working with the Federal Reserve, we'll have up to 4 trillion of liquidity that we can use to support the economy. This is what Mnuchin says. Those are broad-based lending programs. And this is always the catchword. They are forever using this word, broad-based. Broad-based. We see it so much, we're going to continue to see it. He goes on to, or the article goes on to say, we can leverage our equity working with the Federal Reserve. I guess I could end that article there, go back to the Twitter feed. Rodney Howard Brown, he's a pastor who wrote the book, The Killing of Uncle Sam. It's a very interesting book. If you can, try and take the time to buy it and read it. Very interesting. He goes on to say Federal Reserve to lend additional 1 trillion a day. And these are the things. It was just 1 trillion and then it went up to 4 trillion. That's how fast it moves. Lawrence Lepard, he's also good to follow. Fed bailed out hedge funds facing basis trade disaster. And this was an article from Zero Hedge. I may have to skip this one. It's a bit pretty wordy. I think it's good if you folks had time to go and look at that article yourselves. Danielle DiMartino Booth, one of our favorites who we've had on a couple times. I think she's hit something squarely on the head with her tweet where she says, I've longed for buyback debate to be settled, but not like this. This is worse than even I could have imagined. If federal authorities don't have it in them to right the wrong, we may as well take the stars and stripes off our flag. I mean, that's some pretty strong words, pretty poignant words. I mean, what's your take on that? How do you guys feel about that? We're going to get more into that as well, but those are some pretty strong words coming from a very, very smart person and who was formerly part of the Dallas Fed. She was basically Dallas Fed President Richard Fisher's right hand person. She knew it all. She knew it all. She saw it all. She was advising the man. She was definitely in the loop. And now for her to come out and say something like this, where you may as well take the stars and stripes off the flag, it's pretty darn significant. So anyway, let's take a look at what a, what are the things some of you guys are saying. Nasdaq down, yeah, yeah. I mean, I looked at the markets; they're down already. I think they have to even halted once again. Um, let's see, ride the curve. I'm buying gold with my bailout check. Soon the USD will be toilet paper. Yeah, you know that it's amazing. Toilet paper, right? USD toilet paper. One we have too much of, the other we don't have enough of. And it's amazing that it's a toilet paper that it seemed to it's gonna have more value than that USD. Maybe, possibly. Um Victor, Claudio made a purchase before this madness and it's been delayed 2 weeks. Victor, yeah, hang in there. When guys say shipments are delayed, it's for real. It's the truth. Hang in there. Be patient, but if you can, definitely get your orders in because I tell you, these things are being gobbled up right now. And I'm coming to you from the point of, we are Silver Bullion Television, and I am part of a bullion company in Singapore, and I see the numbers. I see what's going on. It's it's amazing. You think the news is moving quick? You should see the bullion flying in and out, and when it says delays, there are delays. That's for real. Um, Bill Parry pushing social distancing as 50 of them give a press conference and people buy it. Bill, I was watching that Trump press conference and I was wondering the same thing where, hey, why aren't these guys also so close together right now? I mean, you look at the reporters, they're sitting 1 seat apart. They're giving a little bit of that social distancing. But they're up on stage. These guys they're pretty much shoulder to shoulder. And you know, maybe the president should not be doing that. He's talking about maybe Congress, seeing if it's constitutional where they can vote from at home. I think maybe the president should be giving some conferences, some live stream conferences or something like that. Not standing shoulder to shoulder with people. Let's see. RR, this is how the Republic dies, not with a gunshot, but with the race to get toilet paper. Yeah. Hey, just never know, man. Just never know. Um, Jack Goldman one, elites use debt to rape Main Street families. Shame. I'm going to talk about Main Street, a little bit about Wall Street, a little bit about Main Street, because there definitely needs to be we need to keep an eye on it, and I'm going to get into that. Going to get into that a bit. Let me continue on with the hang on. Let me continue on with the Twitter feed. Dave Kranzler at Investment Research Dynamics, also another great guy to follow. If you can, go ahead and follow Dave. Brick starting to fall out of CME's House of Cards. Comics being the largest. There was a little bit of trouble with Ronin Capital. So again, Dave Kranzler, Investment Research Dynamics, is another good one to follow. Put him on your Twitter feed, by all means. Luke Groman, again, this is just the opening act for the main event. Got gold. P.S. It's already getting harder for fiat to buy physical gold all over the world. That is true. And we're going to talk about that shortly. Greg Manarino, he's been having some very interesting theories on things, and he can back it up with facts. So, Greg, another great guy to follow. Every single person who follows his blog was made aware of this days ago. However, if that 10-year yield starts to fall, look out below for stocks. Definitely. Peter Schiff, I like Peter Schiff, but lately he just seems to throw out complaints and he doesn't really offer solutions. And he's he's a smart guy for sure. He knows what he's talking about. But I think Peter, I think people may prefer if you could change your tune where you offered solutions as well. That's the feedback I get, and I have to admit I'm also in that camp. But he does have good info. It would be nice though if he also had solutions. I think what we're looking for right now is more solutions. Enough complaints to go around, that's for sure. Jim Bianco at Bianco Research, another good guy to follow. New York Governor Cuomo, 100% of workforce must stay home. Can financial markets properly function with no one on the trading desk? Well, we're going to see how that plays out. I mean, I think everything is all high frequency trading, all algos. Anyway, I shouldn't say everything. There does need to be some human management intervention in there. So we'll see what happens. How deep this runs. James Rickards, Fed's bailing out the muni market. That comes on top of bailing out banks, primary dealers, commercial paper, and money markets. Fine. But don't mistake this for stimulus. They are keeping the lights on, but this will not get anyone to spend velocity dying. So let's take a quick look at what Mr. Rickards has to say with the accompanying article from CNBC. Let's load this up. Federal Reserve is expanding its asset purchases to include municipal bonds. One day we'll support you, CNBC. Not today, though. Federal Reserve said Friday it would extend its asset purchase program into short-term municipal bonds. Thus far, the central bank has limited its efforts to treasuries and mortgage-backed securities in an effort to keep liquidity flowing through the system and to stabilize markets. However, continued disruption in the markets for state and local governments' debt promoted the Fed to take further action in its efforts to combat coronavirus effects. The market for munis this week has all but collapsed. That's strong words. The market for munis this week has all but collapsed, with few willing to step in and buy government debt in the uncertainty of the current climate. In a statement, the Fed said the move is to enhance the liquidity and functioning of crucial state and municipal money markets. The program will work through the Money Market Mutual Fund Liquidity Facility. Say that 3 times real quick. Announced earlier this week and offers an expansion of what had been a financial crisis era program authorizing purchases of other assets, expanding into munis. Again, let's take a look at this. Expanding into munis is something that did not happen during the financial crisis. So, I mean, some of us know what these are, some of us don't. So let me play a real quick clip on what is a municipal bond, a muni bond.
A municipal bond is a debt instrument used by a city, state, county, or other local government authority to raise money for a project. Municipal bonds, often called munis, are considered a debt instrument because when the investor purchases one, he or she is essentially loaning funds to the authority that issued it. In exchange, the authority promises to pay interest, called the coupon rate, during the years prior to maturity, at which point it repays the bond's par value. Munis are used to help fund local projects such as road improvements, school renovation, and other infrastructure development projects. A major benefit of municipal bonds is that the interest paid to investors is exempt from federal taxes, and in many cases exempt from local and state taxes, making them triple exempt. In addition, when an investor buys a bond from a local municipality, he or she may benefit from the actual project the bond funds. Because municipal bonds are backed by the municipality issuing them, they are considered low risk and generally have a low coupon rate. Because their earnings are already tax exempt and they have a low interest rate, some investors avoid putting them in their tax exempt or deferred IRAs. Some municipal bonds may be callable. That means the authority that issued them can pay off the principal early, along with any accrued interest, and then stop making coupon payments. When this happens, it lowers the bond's overall yield because the investor now has less time to earn interest on it.
Yeah, there you go. Skegsies. Sorry if I butchered your name. I'd have to agree with that. That that free music came out years ago, and still as irritating as it was back then as it is today. Apologize about that, guys. I didn't do it. Okay, that's just the music they chose. That is true about where to go at Max Roca, Jesse Colombo. We've been trying. We've been trying. We'll continue. Definitely continue to try. So let me take a look at some of your thoughts here again. Protect your family first, then help others best you can. Bill Perry, absolutely, absolutely. This is what we always talk about. Be a blessing, um, not a burden. There's going to be a lot of people who are going to need help out there, and you can't help them if you didn't really fully help yourself first. And I don't mean this in a selfish way, just to say that a lot of us woke up early, um, started accumulating, and friends and family they are gonna get in a bit of trouble, and hopefully we can be able to help them out. Um, Bill Perry, thank you. It's good. It's good to know. Rolf Steiner, it's over. It's all coming down. Mm, what a positive guy. No, but it's true, Rolf. Absolutely true. It's over. It's all coming down. I tell you what, guys. One day we are gonna have some very very nice, rosy and flowery things to talk about. Just not yet. Not yet. Uh, Ralph, yes. Jack Goldman won. Will the Fed buy the U.S. with counterfeit currency? Is this a takeover by the private secret Fed? That idea has been floating around. I know Greg Manarino. He's been talking about it, and I tell you what, I'm having a harder and harder time each time I watch him to disagree with that guy. Um, it is, some guys feel that what you're seeing is the nationalization of businesses, and uh, he may be right. I'm not sure, but the sad thing is we're going to have to see how this plays out. But the thing is, if we wait and see how it plays out, we'll never be able to return to what it was. So this is where everybody is going to have to make up their own mind and stay informed. And is this okay with you, or is it not okay with you? And it's one of these things. Don't think we can wait and see. You have to kind of take in the information and digest it as best you can and make a decision on what you need to do for your family, maybe for your friends as well. Um, let's see. Victor Claudio Dow futures down 900. I took a look at that also. I saw it, and it seems every day I go ahead and take a look at especially the pre markets. It's always somewhere negative 800, 900,000. It's just insane. And getting back to Greg Manarino, he did make one point where uh, Trump has been in office some 3 years or so. Market has always gone up and up and up, and then basically whatever, however much the markets went up when he got in, got wiped out. So whatever took 3 years, in Greg's words, 3 years was wiped out in 3 weeks. And you go ahead and look at the chart; it's true. And then now the speculation is because these things, the Great Recession happened under Obama, and QE and all of these things happened under Obama, and no blame, no fault here. Just saying that it happened in his term, and the market was at about 6, 7, 8,000 points, somewhere around there, and that's when QE started. And so some guys are theorizing that we saw we're seeing Trump's 3 years get wiped out. We still have Obama's years to get wiped out as well, back down to that 6, 7, $8,000 level. I don't know how true this is, but this is what some guys are theorizing, where Trump's gains were wiped out, but Obama's gains through QE and whatnot um, basically was just rolled over into Trump's presidency, and these things still also need to be cleared out. So if you look at it that way, and it does kind of make sense in some way, it does make sense. You're looking at the market back down to 7,000 or so, and that's some pretty frightening things to think about if you look at it that way. But we'll see. We'll see how it plays out. Um, Getting back to that Twitter feed, Luke Groman again. Manufacturers in China aren't able to fulfill requests. It turns out that when push came to shove, the high cost of U.S. labor was the lesser evil, not the greater evil. The coming reindustrialization of the U.S. is going to be epic. That it is. That it is. Let's see. Yeah, we talked about this, the MMLF. Okay, Jim Bianco again, good to follow. Trin Nguyen, add her on your feed. She is she is smart. She's very, very bright, intelligent. Um, Swap lines. These are the same as the great financial crisis, but the difference here is that instead of waiting 9 months, you get it right away. Good, good. She's glad for Korea, Singapore, Australia, and New Zealand. They got it. Uh, May we add others too, where PBOC and Indonesia, I guess apparently they didn't get it. So this is just to make it easier for central banks throughout the world to have access to dollars, because there does seem to be that credit crisis going on. Um, and this is where it gets interesting. Keith Neumeyer. Sell me some Keith Neumeyer. He's the head of First Majestic, I believe. Keith Neumeyer. A lot of you guys are familiar with him. He tweets out, "Sell me some physical silver under $15. I'll buy everything you can deliver to me." And the paper market. You know what? Now, miners have no balls to band together. Can I repeat that? Miners have no balls to band together. Have asked many CEOs to work together, but little interest to actually try to create a new system. And this is what we want to touch on for now, for this segment of the show, where should miners hold back, join forces? So let's discuss a few things right now, where physical shortages, as you guys have brought up, physical shortages from knock-on COVID impact. Some of the impacts, we mentioned the refineries where this virus is um, causing governments or prompting governments to do such things as lockdowns, self quarantine, stay home, this and that, and so nobody's going to report for work, and that means hey, no supplies. And so again, this is one of the concerns with what was going on in Switzerland, but they do seem to be okay. Um, excuse me. Physical, or also the physical shortages from knock-on COVID impact, does have to do with shipping as well, transportation. I mean, even if the boat got to your harbor, trucking may not be there. Bullion dealers may be labeled non-essentials. So, you are going to see these shortages. Okay, physical gets bought up quickly. Too much fiat money out there chasing limited physical supply. That is true. If I can just say so, I took a look at some numbers the other week, and the silver gold ratio right now, it's at about, let's just round it off, 120 to 120 ounces of silver to 1 ounce of gold. But when I took a look at the numbers of what people are actually buying, I think we were at about 400 or above 400 to 1, meaning for every 1 ounce of gold being bought, you guys are taking up 400 ounces of silver. So, to me, that's a disconnect. We're starting to see some disconnect, and guys are definitely gobbling up that silver at a very, very quick pace. Like I said, if I did do the numbers correct, American math, right? If I did these numbers correct, people are looking at about a 400 to 1, or a little bit more than 400 to 1 ratio, where for every 1 ounce of gold being bought, there's about 400 ounces of silver being bought. And I'm sure that number has changed significantly already from last week. So that's something to think about. That's how quick it's moving. That's how quick it's moving. Deviation of paper and physical prices. When was the last time? When do you guys remember the last time? For me, it was back in about 2014 or so, where there was again a little bit of a shortage of silver in the market, where mints weren't sending out their product, and I believe that at that time spot price went down to high 13s, low 14s, but you could not buy it at that. You were buying it 18, 19, $20, even more, and I think that was a wake up call for a lot of people, where just because spot price goes down, you have to consider other factors, where, like I said, guys are buying it 400 to 1 ratio versus gold. Supply is going to run out, and this is something where the demand is so high, the supply can't keep up, and you end up seeing that price start to go up. So it's something to keep in mind. So if you're out there on the fence thinking you're going to wait for silver to drop, if you can wait 2, 3 weeks, 1 month, or whatever it is for delivery, I mean, go ahead and wait if you want, take your chance. But even then, you're probably not going to be getting it at that price. Even if silver drops, I think you're still going to see premiums hold stable, or even go up somewhat. Taking a look at some of you guys. Steve Bass, bank teller, told me it's safer to keep my money my money in the bank. I laughed. I'm laughing too. It's do what you feel is right. Do what you feel is right. Victor Claudio's out of whack. Definitely. Thomas Stoops, everyone's advised not to panic buy. You should buy as much as you can. No one knows how long this mess will continue. Yeah, I mean, just be prepared to hunker down for a bit. You know, um, do what you need to do. Be prepared to hunker down. Um, it's a different time right now. It's really a different time. Um, Diana Y got physical PMs already. Good, but cash in the bank for dry powder for stocks may be extremely risky too. Yeah, this is where I say if you if you need that cash, dry powder, whatnot, you might want to consider pulling it out of the bank because as mentioned, there's only so many physical dollars for, or that's within the money supply. The rest is digital. It's very easy for the bank to go ahead and limit that digital, or they have control over the digital. You can have control over the physical cash if you pull that cash out and keep it with you. Not saying start a bank run, but pull it out, get it out if you can. Another overtaxed taxpayer, my man. You are one of the guys that I absolutely um, am impressed with, and I do admire. Welcome aboard. Welcome aboard. Glad you're here. Hello, fellow infected silver stackers. That is you. That is definitely you. Welcome aboard. Welcome aboard. Um, let's see. Thomas Tubes. I will trade one roll of toilet paper for one Kruger. Sounds fair, right? Might be. Might be. Of course. No. Let's see. Other things out there. Thank you. Another overtaxed taxpayer. Thank you. Yours is, you're setting the bar, my friend. You're one of the guys we look up to, and we try to reach your level. So thank you for setting the bar. Thank you. Really do mean that. Um, Kevin, Kevin Yaya. I think I'll sell my car. you, you know, what we did a live stream a few weeks or a few months back where Argentina going through capital controls and things like that, and they were saying guys are actually buying cars, where the car would actually be a somewhat of a store value for them. So maybe don't sell that car yet. Maybe don't sell it yet. Hang on, hang on to it. Um, excuse me. So when we look at these things, deviation of paper and physical prices, again, it's because, let's just say, the physical mark or the price for silver, price for gold is set in, let's just call it the paper market, paper trading price, whatever you want to call it, spot price. But the thing is, they don't necessarily reflect or 100% reflect um, the true costs, supplies, demands of especially silver, where they look at it as more of a industrial metal. And for those reasons, because consumption is down, industries just aren't producing right now. That silver starts to, for lack of a better word, pile up, starts to pile up. And again, because a lot of the silver price is based on industrial metals, um, that price starts to go down because to them there's an oversupply of this industrial metal, but to us, it's it's money still, or it's a store of wealth. It protects. Um, it has value there, and so to us it's different. To them, again, they see it as an industrial metal. They do recognize the bullion aspect of it, but because a lot of silver weighs in industry, I'm just going to say maybe they'll tend to, they're not recognizing the the important side, the insurance aspect of silver. And but I'm glad that we do. So these three things: physical shortages, they are true, they are real. Dealers aren't trying to, we're not trying to pull your leg. This is for real. Physical gets bought up quickly. That is real. I mean, again, I can tell you, guys are buying. I've seen by the ton. I'm serious. Guys are buying by the ton. I've seen it not just once or twice. Um, my wife's leaving. See you later. Bye. Okay. So these, sorry about that. So these guys are buying by the ton. That is true. That's true. Um, and again, the deviation of paper and physical. But we're seeing that now with the supply. Supply just can't keep up with demand. And again, suppliers are raising premiums on dealers. So the mints, the refineries, they're raising the premium on dealers, and in turn, dealers raise premiums. So, I mean, I know a lot of guys out there, they feel like dealers are just trying to take advantage of it and this and that. But the thing is, dealers have always had very, very small margins, especially when it comes to gold. And that's just the way the market was. So when the refiner starts to raise the price or the premium, the dealers also will have to raise the premium. It's not again, it's not the dealers trying to take advantage of the situation. In fact, it's quite the opposite, where dealers like us, what we're doing is raising buyback prices. So we're bringing up buyback prices. I think we're even over spot. We see what's happening, and we need to try and adjust the market where there's that paper market and there's the physical market. So what the position we took is, look, let's just raise the buyback. Try and continue to break away from this paper price. I know some guys are still down at even below spot, but I'm pretty sure we were the first one in Singapore. I'm pretty sure we were the first one in Singapore to raise buybacks, and then I believe others have followed. And I'm hoping any bullion dealer out there, if you can, raise your buyback. I'm going to say this is a challenge to dealers out there. Selling, we can't help. It's up to the mints, the refineries. They up their premiums. We also have to up premiums. But the buyback, this is something that we can do to help try to break away from that paper price. There's paper silver, there's physical silver. These are completely two different animals, and we got to recognize this. I know a lot of us do, but we need to break away. Um, and we do. We also we sent out a newsletter. In fact, maybe I should go ahead and and let you guys take a look at that newsletter. Excuse me. So this was sent out last week, I believe, and this past week highlighted one aspect: face mask, hand sanitizers, supermarket supplies, precious metals. They have in common one thing: there's simply insufficient physical stocks when demand suddenly surges, and we are really witnessing large volumes of fiat money chasing after limited physical goods. Prices of gold and silver as traded on future exchanges have fallen drastically. We're all seeing this. And while the demand for physical gold and silver has spiked to exceptional levels in a manner that is reminiscent of 2008, 2011, and 2013, for myself, as mentioned, I remember the 2013 more than the others. I think because that's when I was seeing where how it was affecting people more. As an anecdote, silver bullion has sold more than 10 metric tons. Again, this is just to give you guys a little bit of inside info as to what's happening. Sold more than 10 metric tons. It's a lot more now of silver in the past week alone, which is 5 times our usual sales volume. Put things in perspective, that is the equivalent of 650 monster boxes of silver coins. And again, this is much more now. Other metals that we offer, such as gold and platinum, are experiencing similar demand spikes. When a product experiences Increased demand amid falling prices. Shortages are a natural consequence. To address the shortage situation, an increasing number of suppliers and virtually all bullion dealers have raised their premiums, sometimes drastically. Despite the increase in selling premiums, most dealers are still buying metals from their customers around spot or below spot rates. And this is what we were noticing, and this is why we decided to make a change. This means that the buy sell spreads at some dealers are typically at 40%, even exceeding 100% in some cases. And while we're unable to keep premiums low on the sell side, because again of the mints and refineries, while preserving supply, we have raised buyback prices. At this moment, we have one of the best buyback prices in the industry. This ensures that holders of metal as a whole enjoy the strong increase in premiums for their physical bullion. And it's an important opportunity, very important opportunity for us at Silver Bullion and our peers in the industry. We need to collectively show the markets that physical bullion dealers can reliably make our own market in time of crisis. By adjusting both sell and buyback premiums to reflect physical supply and demand, we would essentially create a market driven by physical price. Only in this manner can we take the first steps to detach the physical market from the highly leveraged paper markets. We are working around the clock to ensure that our products remain in stock during these exceptional times. And this is from Gregor Gregerson, the founder of Silver Bullion. And for guys who really feel the need that, it is time perhaps to look offshore and keep your bullion in a different jurisdiction, we have a promo right now, 75% off transferring charges when you move your bullion into our Star Storage. And once it's in Star Storage, you can use it. You can use your bullion for P2P loans. We talked about this before. Your bullion can be used as collateral if you need to buy more bullion. You can take out a loan on that bullion and buy more bullion, or you can buy whatever you want to do with it. Let's see. As an example, we're buying back Maple Leaf silver coins at $3 USD per coin, and gold maples at 30 USD per coin. This is referring to spot prices, I believe. And there's more than 100 million in loans that have been matched as far as the peer-to-peer program. And again, everything is tested. You're going to know for sure if the gold you have is really gold. We test it by using density, ultrasound, and X-ray testing. So that is a good thing as well. And we've also had an article that came out on Zero Hedge. Again, guys, I rarely do this. You folks know that. I rarely do it, but I just want you folks to know what we're doing. And hopefully the bullion dealers in your area are doing the same or better. And if they're doing better, let us know so we can try and see if we can do similar things again to get that physical away from paper. So bullion dealers need to increase their silver and gold buyback prices. Again, from our point of view, from Gregor, the founder of Silver Bullion. And the article goes on to say that given the unprecedented nature of events surrounding us currently, I would like to make public what we at Silver Bullion are seeing and the course of action we have decided to act upon. Over the last week, the prices of gold and silver as traded on the future exchanges have fallen. And while demand for physical gold and silver has spiked to exceptional levels in a manner that is reminiscent of 2008, 11, 13. As an anecdote, silver bullion, and we are in Singapore, as mentioned, we sold quite a bit of silver gold. As we mentioned, the 650 monster boxes. The main thing in this article, I'll just leave the link here for you guys, is to know that we are trying to break away from the paper price, or at least show that bullion dealers can go ahead and we can set the market. You folks can set the market. We can set the market, and this is something that is long overdue. Long overdue. So I want to get back there to see what's going on with the questions and comments right now. James Richter, how you doing? Let's see. Faye, the Brits are disobeying. Well, okay, but this is something I do hope that you folks talk about as far as what's going on with the prices, both on the buy side and the sell side, where the one thing that dealers are in control of is what they buy back silver and gold from you are, and we're trying to do our part. This it's a different time right now. We're trying to do our part to not just to to be fair. It's more about, again, trying to recognize the true market prices, or if not the true market prices, at least trying to get away from the paper market. So again, check around, just check around, see what your other dealers are doing, and suggest to them higher buyback prices if they're not doing it. And the other part, if I mean, I say this from time to time, if they're selling a 2016 coin, a 2017 coin, a 2018 coin, if they're selling those at higher prices, um, again, that's an talk to them, because it's bullion. It's not a collectible. If they got that 2016, 17, 18 coin, chances are they might have gotten that from a buyback that came in off the street, that they bought below a spot price, that they bought at a low price. And so it should not be selling at a much higher premium. So that's something to keep an eye on too. So if your dealer's doing that, maybe talk to them as well. They should be giving you fair prices all across the board, and do do the best they can, because it's not. I think a lot of us realize it's not just about the money. People need help, and we're trying to do our part to help people. Money is secondary. Sales is secondary. It's about getting silver and gold into people's hands, because we need that vehicle to get us through this transition right now. That we need that store of wealth. That's our priority right now. Definitely our priority right now. So, if you can sign up for an account with us, we send newsletters out, I think, at least once a month or so, somewhere around there. We try to put in insights, information as to what we're doing, what we see happening. So, if you can go over to our website, just go ahead and create an account. Let me just pull this up real quick. Just go right here, sign up, www.silverbull.com.sg. Sign up. Um, Opening an account is free. You guys know I rarely do this, but I think everyone needs options right now. So consider this an option that you may take up, you may not take up, but it's there. It's free. It's an option for you that should be on the table. So sign up, and then it's fairly simple from there, where you're just going to a little bit of common knowledge type of information, or information that you would commonly submit, and then we'll go ahead and see if we can get that account opened up for you, and then there'll be things like newsletters and things like that. um so again, there's things going on, and we're going to have guests coming up that will be talking about it. We got Tavi Costa coming up, we got Ronald Storfley coming up, and then Jim Rogers. We have Jim Rogers coming up, and I watched our Jim Rogers interview last night, the one that we had a year ago, and he hit a lot of things on the head. He nailed it. So we're going to bring him back on, and we'll talk to him about some of these things. So again, Tavi Costa, he's a macro economist and a chart guru. This guy, follow him on Twitter as well. And again, we plan on talking about key indicators that are screaming at us and warning us of the perils and even opportunities that are ahead. And then we have Ronald Storfley, the co-author of the In Gold We Trust report. It's the gold standard report, the who's who of analysts use. And we'll be discussing gold and the volatility of the markets, and why gold and silver is where we need to be. And as mentioned, Jim Rogers, investor extraordinaire, best-selling author. Jim famously said there's going to be a huge shift in American society, American culture in the places where one is going to get rich. The stockbrokers are going to be driving taxis. Well, for some, that might be a good job for them. In February 2018, he reportedly predicted that the next bear market would be the worst in our lifetime. So again, be sure to subscribe, click on the bell, and so you don't miss these interviews coming up. And if you have someone you'd like to see, as someone pointed out, Jesse Colombo, if you have someone you'd like to see, let us know, and we'll try to get them on. So going into the program part, took a while to get here. A phrase came up last week, a phrase that, or a word that many of us never knew. And that word, it's another fairly new tool created by the Fed, another tool in their toolbox. And what we heard was this word, a commercial paper funding facility. So what is it? I'm going to play this clip from Yahoo Finance, and this gentleman he'll explain what this commercial paper funding facility is.
We also have some breaking news we want to bring you now from the Federal Reserve. We've got Brian Chung standing by live in our newsroom with the latest. Brian, what is this about?
Hi, we got some breaking news. The Federal Reserve has just announced that they are opening a commercial paper funding facility. This is what they call a way to supply short-term money to companies that may be under stress as a result of the coronavirus. For those that aren't aware, commercial paper is a way for companies, not just banks, companies across the board, to finance short-term needs that they have. So commercial paper could be 90 days, for example, which would cover 3 months. And this is basically short-term corporate debt. There's been concern as of late that that market has been drying up and that companies that have been squeezed on margin have not been able to issue commercial paper or find appetite for purchasing commercial paper because everyone is hunkering down. Now, what this commercial paper facility that is opened by the Fed will do is it will allow companies to go directly to the Federal Reserve to roll over any commercial paper obligations that they have so that they can extend the short-term funding that they will have access to. Now, what's important to note about the commercial paper funding facility is that unlike what a lot of the Fed usually does, this is not just for the banking industry. So any type of company, any type of corporate, whether it's a pharmaceutical company or even an airline company.
Okay, even an airline company, and we'll touch on that also. So, I mean, as he said, it's they can roll it over, roll it over, roll it over, roll it over. Is it ever going to get paid? That Fed infinite balance sheet, Fed to the moon. Fed moves to backstop funding for U.S. companies as coronavirus fallout spreads. Take a look at the date here is March 17th, but this seems like old news already. And this is a bit of the problem I ran into as I was trying to prepare this live stream. But nonetheless, it's a new word, new tool in the toolbox. So let's take a look at it. U.S. Federal Reserve moved Tuesday to ensure the flow of credit to U.S. companies, banks, and even local governments amid a nationwide scramble for ways to blunt the economic fallout from the coronavirus. The Fed in the morning, again, this was last Tuesday, announced it would reopen the so-called commercial paper funding facility to underwrite the short-term loans that companies often use to pay for their operations, a key financial market backstop. Catch this now. First set up in 2007 to 2009. This was non-existent until the Great Recession during this time frame. So new tool, nice new tiny tool. They're gonna clean up and then get ready and oil down and grease it up and get it ready to turn the gears. So at day's end, it extended its reach as the economy's lender of last resort to the 24 Wall Street primary dealers who are critical to the functioning of bond and other financial markets by letting those companies pledge municipal bonds, corporate debt, and equity securities as collateral for 90-day Fed loans. The Fed aimed to keep credit flowing to parts of the economy that may face an unfolding nationwide cash crunch. The actions were approved by the U.S. Treasury Secretary under emergency rules that broaden the Fed's lending powers beyond the banks that are its usual customers. The move came as U.S. officials sought to prevent public health steps such as business shutdowns from causing widespread economic harm. Fed Chair, the guy with the lavender tie, Jerome Powell, and House Speaker Nancy Pelosi discussed efforts that might be put into play by the Fed or other branches of the U.S. government. According to a Pelosi spokesman, debates about other facilities were ongoing, and the U.S. elected officials were contemplating hundreds of billions of dollars of relief in the form of checks mailed to every household. Let me take a look at another article. And then we had the trying to think of a nice word for these guys. Ben Bernanke and Janet Yellen are urging the Fed to go beyond authority and buy corporate bonds. So now they want the Fed to buy corporate bonds. I don't think this is in their mandate to do, but nonetheless, former Fed chairs Ben Bernanke and Janet Yellen are recommending that the central bank buy corporate bonds. Tell me if businesses are not being nationalized already at this point. Under the current law, the Fed, there you go, the Fed lacks the authority to take on that much risk. The Fed already has reviewed financial crisis era programs to address liquidity issues. Former Fed Reserve chairs Bernanke and Yellen are recommending. Okay, so we just kind of read that part. In a Financial Times essay, the two says the Fed should look for more authority that would give it the power to purchase corporate bonds. Okay, and which is not legal for them to do right now. The Fed's intervention could help restart the part of the corporate debt market which is under significant stress. Interesting words. Restart. So that means it stopped. That's how I would define it. So it stopped. Bernanke and Yellen wrote, such a program would have to be carefully calibrated to minimize the credit risk taken by the Fed while still providing needed liquidity to the essential market. Yellen and Bernanke served during the financial crisis, the latter as chairman and the former as head of the San Francisco Fed. Back then, they helped to roll out a number of innovative programs aimed at recapitalizing the banking industry and getting money flowing through the financial system again to businesses and households. So their innovative program was basically wait, hang on. So their innovative program basically, I think you guys know what I'm going to do. The innovative program was money. Throw money all over the place. That's as innovative as they got. Throw money all over the place. So good job. Good job. I mean, this toy gun just did what the academics suggested needs to be done. So that's all they did. Throw money all over the place. And the thing is, they will always create something new. And I want to play a clip that I did back in, I believe, November. I want to play this clip again for you guys to see.
The core problem with financial crises is that the only way to stop them and fix them is to do things that people view as unjust and immoral by doing a bunch of things that are tragically offensive to people.
You know, when you got a big, ugly problem, the idea that you're going to have some elegant solution just is a pipe dream. So you're trading off doing something that's really unattractive versus doing nothing at all, which may be worse.
Do you think another crisis like 2008 could happen again?
There's a set of rules. Then the industry innovates. And they come up with things that aren't covered by the rules. So you have to have new rules. And you have new rules and they work for a while, but then people find a way around it. So the next crisis will come when there's another innovation that gets around these rules.
These crises are going to happen again. And again, I think that's one thing that you learn when you go through that.
The same crisis is almost certainly not going to happen. Something else will, but not the same.
I don't know any banker who can look at themselves today and say, you know, we didn't make mistakes. Yet, most bankers at the time were as focused on helping provide a solution as they were just looking at their own problems.
People are trying to help each other. We were all trying to do the right thing for the country, and of course we were all part of the problem, but that doesn't mean we weren't going to try to do the right thing for the country.
Okay, so I mean, the Fed is in everywhere. Now it's in corporate debt, corporate loans, all of these things, and non-financials were the workaround, where the banks were being regulated, but corporate was not. So non-financial sector, they went ahead and started to do all these things, trying to look for yield because interest rates were so low. So non-financials were the workaround, corporate debt and corporate bonds. What next, if not already, and if this not is already, CLOs. Not many of us knew or heard of this word, collateralized loan obligations, better known as CLOs. So I just want to take a quick look again at the definition of what these CLOs are. Just a refresher, because if we're already into corporate loans and corporate debt, we got to know what a collateralized loan obligation, or CLO, is. Collateralized loan obligation, CLO, is a single security backed by a pool of debt. Often these are corporate loans, which we're talking about now, that have a low credit rating, or leveraged buyouts made by a private equity firm to take a controlling interest in an existing company. A collateralized loan obligation is similar to a collateralized mortgage obligation, except that the underlying debt is of a different type of character. A company loan is used instead of mortgage. So this is pretty much just another form of corporate debt. And again, Fed is looking at throwing money, corporate loans, corporate bonds, CLOs. Is this already CLOs that they're talking about? Or is CLOs something that hasn't even come into play yet? If it hasn't come into play yet, watch out. If it hasn't come into play yet, watch out. So corporate loans, corporate debt, that's where the Fed is headed to. So last year when we took a look at things, we said, hey, if anything should ever go wrong, they always do, these CLOs are going to be like last decade's CDOs. Remember those collateralized debt obligations that got into trouble, right? The difference, AIG insured those CDOs, and AIG went bust. They needed help. With CLOs, as far as we know, there's no AIG to be that backstop. Instead of AIG, we may be looking at the Fed. The Fed may be the backstop for their CLOs. Whether they're in play or not, I can't give you a definite answer, but we know the definition of CLO, and we all know they're talking about corporate loans, corporate debt. We're not that far off, if not there already. But why should we care about this commercial paper funding facility that's kind of been in the news? Why should we care about that? And why should we even care what the Fed just did? Trying to save us, right? But what does it really mean for us? So we'll check back in with that young man from Yahoo Finance and see what he has to say.
For those listening and not quite understanding what establishing a commercial paper funding facility means to them, why should the average person or the average investor care about what just happened with the Fed?
Well, they should care because this is a way that you can keep businesses at least alive through the stresses from the coronavirus. So when you consider the fact that there are all these retailers, large and small, that have to rely on funding while they close their businesses, while consumers are quarantined inside their homes, it's uncertain about how long these companies will be able to survive with no profits, with no revenue actually coming in. So when you consider that we don't know how long this coronavirus will last and that most commercial paper issuance is only 90 days, the assumption is that if you cannot survive beyond 3 months, if you don't have enough cash on hand to last that long, you ultimately will have to go out of business. So that's why people have not been buying commercial paper or actively participating in those corporate debt markets. And the Federal Reserve right now is trying to say, we're going to offer our own lending facility so that if anyone has commercial paper that they need to renew, you will be able to find a counterparty to keep that funding going. So the Federal Reserve is effectively saying, we are going to allow you to do this. And what's important to note is that the Federal Reserve mostly does a lot of its activities through the banking system. This, again, will be available to even non-banks and many other types of industries.
Okay, so let's realize something. In 2008, banks needed to be bailed out. They still aren't right. They were never right, and we can't pull that punchbowl away. Now it's business and industry. Let's call it corporate that needs a bailout. Too big to fail. Too big to fail banks are still with us, and too big to fail businesses, they're now upon us. And that punchbowl just got bigger, along with the money supply, along with the Fed balance sheet, as I just showed you. Banks, they were getting cheap money. We know that, and they essentially they were given money to hopefully do some creative, innovative things and to grow their business. But a lot of them, businesses in turn, many of them were buying back their own stocks. And this is the part where a lot of us get frustrated. A lot of them were buying back their own stocks. And this is something where Mark Cuban, he wanted to voice his opinion on that.
Okay, two different things. One, getting money into the system is a function of the Fed, and they're obviously taking those steps right now. Two is when there's a bailout. When there's a bailout and the government comes in and offers assistance to an organization or public company in particular, whether it's an airline, whatever it may be, there are most likely going to be steps taken by the company, and historically this is what has taken place, where they reward the executives. They reprice their options. They give them more stock. They give them warrants. They give them options, whatever it may be. Whatever it is that a company does for their executives, they should be required to proportionally do the same thing for everyone else that works for the company. Period. End of story. Part one. Part two, no buybacks. Not now, not a year from now, not 20 years from now, not ever, because effectively you're spending taxpayer money.
Okay. What do you think of what Cuban said? What consequence should there be if a company is bailed out? Should they not be allowed to do buybacks? I think there should be a consequence. I'll start off. I mean, I hope you folks chime in and offer your opinion as well. I think there should be consequences, but the problem is, who do you hurt with these consequences? Do you hurt the business? Do you hurt the employees of the business? I mean, I think you want to just focus some type of consequence on the board. I think that's where you want to keep it. How you would legally do that, I don't know how you would legally do that. And the other thing is, if they don't do buybacks, I mean, let's just face it, they will find something else. They'll find another way. Their friends on Wall Street will help them find another way. Their finance friends will help them find another way. There'll be a lot of creative accounting. So, I mean, the thing is, should they be penalized or have some type of consequence? Yeah, absolutely. But where do you go with it? How far do you go with it? And what do you do? And it's as if these guys, and I've said this before, what corporate learned back in 2008 was there were too big to fail banks. Too big to fail. They learned that there is a such word as too big to fail. I think what corporate understood is, if we get in trouble, so be it. We'll get bailed out as well. And so they took on these little bit riskier assets, trying to get yield. I'm assuming here. I don't know for a fact this is what they did. I can't point to any one company that did exactly this or that. But in general, I'm offering my opinion where they went ahead and they did things like these buybacks. Would have been nice if they put it in innovation, creativity. If they built up, let's say their assets, would have been nice if they did that. But a lot of it just went to these buybacks. Let's see what some of you guys are saying out there. Robbed. Cardinal sin. Robbed. Yeah. MM1 to 6 Fed prints money. Let's see. Gold, silver, cryptos. If the markets keep crashing lower, let's say Dow to 5,000, metals should get smashed much lower in price. Right, Patrick? Okay. I'm going to say possible. And I say possible because here's the thing. We're seeing it right now where metals are being smashed in price. But you go and try and buy it. You're not going to get it at that price that you're being told what it is. You're not going to get it at that price. You might not even get it to have where the supply might not even be there. And, this is the thing where, again, what we're trying to do is to once and for all, whether it's enough or not, at least it's a start. Try to let the market, the physical market, grow in its own way or become something that is more free, more of a free market than what we have with the spot price and the paper silver markets. It's got to start somewhere. And, I'm glad that at least in Singapore, I'm pretty sure we were the first to start it. I'm glad that others have followed. And I'm hoping that in your area, guys will follow as well. So that's a great question. Price will go down. a lot of guys had said deflation before inflation. So we might be seeing that deflation, possibly. But in the end, you try and buy it, you're not going to get it at that price. So again, two different things, but a great question. See what else is going on. Let's see. Johnny Dingle, I announced my debt jubilee 10, 10 days ago. Good for you. What'd you do? Share it with us. Thomas Wilhelm, when will paper metals bottom out? Paper metals. That's a really, really, really tough question. I think gold has been hanging tough at about that 1500 USD level. Silver, on the other hand, again, because it's seen more as an industrial metal, and because industries just aren't back at full swing yet, the consumption is low. It's just my opinion. The consumption is low. Companies aren't geared to warehouse silver. If you make keyboards, you use some silver. If you make iPhones, you use some silver. If you make almost any electronics, you use some silver. But the thing is, you will tend to take the delivery of your raw products to create these items more or less just in time. You don't want to hang on to it too long, especially silver, which is a commodity that price is going to change a bit on you. But these companies are not geared to be a warehouse to store silver. So that's the issue right now, where if they don't create these items, they don't produce, demand is low, consumption is low, it's going to take down the paper price. But you try and buy the real thing, completely different story. And again, I'm glad we're doing this. And again, get your dealers to follow, if at all possible. Great question. Let's see. I'm looking for some questions. Okay. Well, I don't want to spend too long trying to look for these questions that I can answer. RR, I can depend on you. I didn't read your question yet, so I hope it's something I can answer. The lies and fraud must end if we're ever going to get balance back. Fiat money and central banks have proven they do not work. Yeah. Completely agree. It's time to make the rules reflect the best interest of the majority. I wish we could. Situation is a lot of people. We were never really financially educated, and I'm not saying people are they're lacking intellect or anything like that. No, I'm just saying we never really had to deep dive into finance. A lot of us never had to, and we only woke up because we saw guys like Mike Maloney and whatnot, and then we started to understand things like, hey, wait a minute, you mean the Fed is not actually part of the government? They're a private bank. And then you start to see these things, and then you realize, okay, there's certain things I need to do. We woke up. But the problem is a lot of people still have not. And that's the majority. We're the minority right now. We are the minority, not the majority. Best we can do is just do things like live streams. All you guys out there who do it, appreciate that you do it, because the thing is, what we're seeing right now are exactly the reasons why you should be buying physical gold and silver. Store values, wealth protection. Guys may say, what kind of wealth protection is that? Look at the price it fell. Well, you try and buy it. As I said, you're not going to get it at that price. So, again, another good question. But, besides Cuban being upset, about bailouts and things like that, recently we saw one of America's biggest companies, Boeing, receive a bailout, which is why a lot of people are upset, including this person here, which a lot of you guys may recognize the name. Nikki Haley. She resigns from Boeing because of the in protest because of this bailout request. So Boeing requested for bailout, right? So Nikki Haley, the former governor of South Carolina and former U.S. ambassador to the UN, so she's in the game. She knows. She resigned from the board of Boeing Corp this week or last week, according to a filing, because of her disagreement with the aerospace company's request for a government bailout. Boeing has said that it supports at least $60 billion in aid for its industry from the federal government amid the spread of the COVID-19 and admitted in its filing with the Securities and Exchange Commission that Haley does not believe that the company should seek support from the federal government and therefore decided to resign from the board. While I know cash is tight, that is equally true for numerous other industries. For millions of small businesses, Haley wrote in her resignation letter, dated last week, that was included with the filing. It's from Nikki Haley. I cannot support a move to lean on the federal government for stimulus or bailout that prioritizes our company over others and relies on taxpayers to guarantee our financial position. I have long held strong convictions that this is not the role of the government. So that's what Nikki Haley had to say. And then there's another thing that Mark Cuban had to say that I want to roll.
Do you think that we're going to have a national bailout for companies across the board? Do you think we should look to airlines or other specific industries for help? I mean, that we should be helping? How would you approach it?
I think we have to. I mean, look, this is cascading, and it's getting worse by the minute. The number of layoffs is just skyrocketing. And so if I walked in the door, the first thing I would do is prioritize. And I would create effectively, and this isn't the right word, but effectively create two buckets. Bucket number one, and we have to do these things in parallel. Bucket number one is how do you help companies of all sizes to keep paying their employees and not lay them off or fire them? Because we want to keep people employed, even if it's make good work, even if this is the Tennessee Valley Authority all over again, and we're just subsidizing companies to keep their employees on the payroll and finding things for them to do. Because keeping them in the payroll, it will pay off more in terms of minimizing taxpayer requirements than releasing them or fire them or laying them off and then having to go find jobs in the future. So that's bucket number one. Do all you can to keep people employed. Bucket number two, we've already seen significant layoffs. There were people who were already unemployed. That's where we might consider helping people, whereas if you're going on to unemployment or any type of government, federal government assistance, then maybe we pay them a bonus, and that's not a good word for this, but give them a check for the $1,000 to help them get through the immediate need because they've just been laid off or they don't have a job. And that helps people get through these problem times.
Okay, so according to Cuban, you got to give people money to help get through these tough times. And almost as if on cue, not too further down the road, President Trump wants direct payments of over $1,000 for adults, $500 for kids in coronavirus stimulus bill, according to Mnuchin. This article from CNBC. Treasury Secretary Steve Mnuchin last week laid out details of the Trump administration's plan to send Americans relief money. The White House is talking to congressional leaders of both parties about a massive stimulus package to blunt the impact of the coronavirus crisis. The proposal includes sending payments directly to Americans totaling $500 billion, broken up into two tranches. First one would be $1,000 per person, $500 per child. Nugent said, so for a family of four, that's a $3,000 payment. And so again, Mnuchin said last week, he basically laid out the details. He gave the numbers of what it is. Again, the tranches, the first one will be $1,000 per person, $500 per child. So a family of four, that's $3,000. As soon as Congress passes this, we get this out in 3 weeks. And then 6 weeks later, if the president still has a national emergency, we'll deliver another $3,000. So I'll kind of stop it there. Helicopter money, right? We've talked about this for a while. But, I mean, the good of it, they're trying to give people relief. Now, I don't know if this is passed. I heard something in the Senate did not pass this morning. I don't know if this was it or not. I haven't looked into it. But the good, they're trying to send relief to people. But there's also some negative. There's also a negative side to it, which I'll get into. But at least they're trying to do something about it. And then I saw another bit of news that we talked about. So firstly, again, understanding the Fed is money's going all over the place. It is going all over the place. And again, this is why we are getting gold and silver. Um, it absolutely has 100% to do with the reason of why he would get gold and silver. And then I saw this bit of news also, which we have touched on before, where coming out from Fox News, businesses are banning banknotes, asking customers to use credit and debit cards. Let me get down to the article. Excuse me. That's a sentiment a growing number of businesses around the world have adopted as fear grows over the spread of the COVID-19. Despite assurances from public health officials, some retailers are banning bank notes. So is this the setup? In Chicago, Open Books, a nonprofit bookstore, sent an email to customers asking they not use cash. A chain of diners in Washington state has stopped accepting cash, and door-to-door delivery services like Grubhub and DoorDash have put no contact policies in place and have either removed cash payment options or are actively discouraging them. Julie Fisher, a professor at the Center of Global Health Science and Society of Georgetown University, says while there may be traces of the virus lingering on paper bills, it is unlikely virus particles will return to the air or aerosolize once on a surface. Despite the reassurance, some people just aren't ready to risk it. South Korea, which has been more successful in stemming the outbreak, the country's central bank took all banknotes out of circulation for 2 weeks, or in some cases, burned paper money. Isn't that good to know? All your hard work and your effort to get this piece of paper to represent your time and labor can simply be burned. The National Bank of Poland said Thursday that Polish banknotes are subjected to quarantine and are therefore safe to use in cash transactions. So, I mean, that we get the story. You know, I mean, it came out weeks ago where China was also taking cash back in. They said to sanitize the cash. Well, you know, it doesn't make sense to me to do something like that. I mean, either you do it or you don't. You know, you sanitize it. You say you sanitize. You put it back out in the community. It's what, going to get sick again? So I mean, for me, it doesn't really quite make sense. You either do it all or you don't do it. And the sad thing is, someone like me is saying this: you do it all or you don't do it, which means, am I advocating to go cashless? No, I'm not. I'm just, cashless is something I absolutely do not want because I know how control comes with that. But, you know, I think you're going to get people who are going to say exactly that. You know, either you do it all out or you don't. And that's the danger of this thing, because we are essentially, in a sense, asking, you know, for this protection, for this security, peace of mind, peace and security. We're the ones asking that, and we're giving up. We are giving up things. And I'll play one more clip, and then I'll just get to my commentary. This one was from a few years back. So, you know, we're talking about people getting money and things like that, the Fed nationalizing everything. We're talking about going cashless. And then I come across this article that I think came from a couple years ago. So this one really sums it up. So this was December 2018. Okay, and again from Fox News. Chinese schools enforce smart uniforms with GPS tracking to surveil students. This is for the security of our children, right? We're going to give them clothes that can be tracked. 10 schools in China have new intelligent uniforms that will track students' whereabouts with embedded computer chips. The uniforms, which are equipped with GPS devices developed by a local tech firm, are meant to ensure that students don't skip class. Okay. Alarms are set to go off if a student walks out of the school building or falls asleep during a lesson. I know more than half of you guys, our alarm would have been going off, right? We sat in the back row and we went to sleep for a while. According to the state-run media, although the school's administrators and parents have access to the local or the location data, principal of Renhuai Lin Zhongwu, said that we choose not to check the accurate location of students after school. He also noted that attendance rates have risen dramatically since the uniform's introduction. The company's project manager told the state-run Global Times that the two chips embedded in the uniforms can be washed up to 500 times and can withstand temperatures of up to 300 degrees Fahrenheit. According to ABC, the company posted a public statement saying the uniforms focus on safety issues and provide a smart management method that benefits students, teachers, and parents. It's beneficial to have these clothes, right? We all should have these. Give me a couple extra large. Thank you. The chips can also reportedly be used as a, there you go, cashless payment system for snacks bought on school grounds, although parents and the school would see everything a student would buy. You getting that? Let me just say this one more time. The chips can also reportedly be used as a cashless payment system for snacks bought on school grounds, although parents and the school would see everything a student buys, and that's the danger of cashless. In addition, if students try to swap uniforms, I know I would, in order to leave the campus, the system is designed to prevent that. Facial recognition scanners at school gates match the chips with the correct student reports, the Telegraph. The technology, which is being used in China's southwest province of Guizhou, has apparently sparked debate on China's social media platform. So again, I'll put the link here for you guys. If you want to, read through it again. Share it if you need to, if you have a live stream or whatever it is. I mean, this is where we're at. And again, this came out in 2018. So what do you guys think of that? What do you guys think of that? Giving out money to people, okay, people need help, I get it. Giving money out to businesses, okay. Businesses, if they go under, there's no employment for people. Okay, I kind of get that too. Going cashless, not a fan of it. Definitely not a fan of it. And now school clothes that they conveniently are starting out by saying this is a benefit to your child. It'll help you as a parent. It's always things that tend to start out that way. So I just want to take a few more questions before I give my final closing comments. Let's see. RS1, bills infused with silver would not hold the virus. You know, silver is very malleable. You could roll it out into pretty much a thread like dimensions, diameters. You could weave it in. You know, you could definitely weave that into a paper bill or somewhere in that paper bill. You definitely could, as well as for clothes. I think they even do that with some clothes. We already do this with Band-Aids, things like that. Even socks. In fact, I think there's even socks that they use copper in it, and that supposedly takes care of the toe jams. So if you got some toe jams out there, get those copper socks. Get those copper socks. Okay, so I'll just offer some comments. I mean, really, there you go. What I'm seeing is a punch bowl that cannot be removed from banks, can't be removed from investors. It's not going to be able to be removed from business, even down to local governments. It's not going to be able to be removed from local governments through the muni bonds, which we just took a look at, all the way down to just about every household and person. I think once we start this, and I get it, I understand people need help, but I think once we get on it, this punch bowl will not be able to be removed. We could not take it away from banks in 2008. I think if you keep continuing with this in every industry, all the way down to the household, to the family, to the individual, we're not going to be able to get off that punch bowl. And that's a huge concern that I have, because that will change government. What type of government in the U.S., or is the U.S. transforming to? I mean, we're seeing some of these things where banks, businesses, local governments, and people, if we can't financially survive anymore because we need that punch bowl, what is the government going to transform into? And it's not just the U.S. now. It's, in general, every government. Things are going to have to change once all of these handouts, bailouts keep going into the system. I don't think they're ever going to be able to take it back. Industries, municipalities, people, can we survive without being told what to do or given a handout in order to keep their or our rice bowl full? Which industries will they consolidate? Because probably that's what's going to happen. Some industries will be saved, other industries are going to fall. We saw that back in 2008. Who chooses what company stays alive and what company falls? Our choices, they're going to be limited. As mentioned, some companies will survive, some won't. We're not going to have, that range of options and choices that we have now. It's going to be difficult to see how that can happen. Innovation, entrepreneurship, it's going to be difficult to see how these things can continue. Our choices are going to be limited. What's the rest of the world going to do as we all parachute down together? And I don't know how else to how else to describe it. Seems like everything's on a free fall, parachuting down. We're just slowly going down. And what do we do from this point? But make no mistake, fiat and perhaps freedom obviously have an expiration date. Sad to say, it's starting to look that way. We know fiat had the expiration, but with all this monetizing of everything, where does that play into as far as personal decisions, personal, let's just say, freedoms in some sense? Has an expiration date. Monetary experiment cannot go on forever. It cannot go on forever. Knowing that, and already, it's gold and silver for me. Gold and silver for me. The gold standard and all those things that many people, including me, including I, had dreams of, it's taking a back seat right now. Takes a back seat to wealth preservation and maybe even preserving your freedom through financial freedom, because you're not tied into this game that they're playing. And personal freedom, financial freedom, they're now more important than ever. Gold, silver, financially will help you. It's going to help you. As central banks continue to pump money and inflate the world, and personal freedom begins with understanding just that. Gold and silver. You got to understand, again, as always, it's more than just that price. It's that vehicle that you're going to need to transition over from the current system that we have today over into the monetary system that looks to come. And a lot of guys are thinking it's going to be some type of central bank digital currency. They're already priming us that, maybe cash can transmit this type of this disease or whatever it is. But we're all being primed at the situation where we may have to go cashless. And again, if you folks follow me, we've talked about central bank digital currencies. This is not some fantasy conspiracy thing. We've shown it time and time again, various articles, what the banks themselves have said. So just learn as much as you can. You don't need to take everything I say as gospel. In fact, please don't. As a lot of guys say, do the research yourself. Look into it yourself. Make your own decisions. You got to stay informed. You really do. And again, for me, it's gold and silver. That's where I'm at. Price falls down, it's okay. I try and get more, but unfortunately, at this time, when you try to get more, you're not you may not be able to average down your cost, but it's okay because it's not about the price. It's about the wealth preservation that you want, that you're looking at. And just want to show you guys one more thing before you go. I want to put this this link out there. Gregor, again, our founder of Silver Bullion, he recently did an interview. I urge you guys to click this link and listen to the interview that he had, where he talks about the panic in the paper markets and shortages of physical silver. So you're going to hear it directly from someone who's very knowledgeable about what's going on and is seeing what's going on and working in the environment with what's going on and trying to best navigate through it. So I'll take a look at a few more questions before I head out, or comments before I head out. Swap gold for arable land. Faye, it could be, I mean, for me right now, I think the important things, this is just me, it's not financial advice. Nothing I say here is financial advice to be taken, it's just my opinion. It's not financial advice. Land, things I look at, cash, you should have some cash. I've said this before. Especially in the US, you should have junk silver. That's the first thing people recognize if it really gets to worst case scenario. Have some gold, have some silver. These are your stores of wealth. Don't let guys who tell you, look at the spot price, what kind of store of wealth is that? Well, try and buy it. Like I say, you're not going to get it at that or anywhere near that spot price. You want to look at crypto as well. You want to have something that you can easily transfer, some type of currency that people are going to take, especially if they're looking at going cashless. You want to have that. You definitely want to have some land and real estate, because I tell you what, I think your house is going to be your lifeboat. But if you over leverage it, may be an anchor. So be careful with real estate. Just my opinion. Your house can definitely be your lifeboat. So just want to look at a few more things. Daryl Rowan Marples, physical gold and silver is true value. Gold-backed crypto coin will be the best solution for all. Daryl, I'm going to give me a few weeks on that, or maybe less. I will definitely have something in detail about that, as something definitely has come up. And it's slowly being released out in the open. So I definitely want to get this out in the open to you guys as well, once I can really lock it down and get more info on it. So hang in there. I'll let you guys know about this what Daryl was talking about, this gold-backed crypto, where it may be the best solution for all. So be sure you guys have subscribed or clicked on the bell anyway, because when I bring this out, I think it's going to be very interesting for a lot of you guys. So I'm still trying to tie up all the pieces and lace up before I run it out to you guys. Let's see. Fritz Bender, I can see it being like earliest colonies in U.S. with more morality and shame for cheating others. Yeah. Raymond Wright, SGD to diversify from USD. Not sure I get the gist of it. I know USD is getting stronger against all currencies. Last I checked, we were at 102 on the US dollar index. So I mean, sorry, I just don't want to go off in the wrong direction. Peter James, invest in a chicken farm. I'll buy some chicken from you. Where's it going to be at? Okay. Cardinal Sin, I don't trust crypto yet. Yeah, you hit that on the head also. It's difficult to you see so many things about crypto, and I think that's where if you can have that type of a gold-backed crypto where you 100% know the gold is there. And this is where I say, a lot of guys talk about gold-backed crypto. I want to see a crypto where there is gold in the front, not in the back. I want to see gold in the front, and then you got me. If gold is in the front and I know it's there, you got me. That's what I'm looking at. Let's see. A few more questions. It's all traps right now. Yeah, they are fiddling a plan. Can be. Gold in my hand is not a trap. True. But, again, with that, though, cyber, it's also good to, and I hear this all the time, and before I was not a believer, but now I am. So I understand two sides where, it's good to have gold and silver with you. Absolutely. Hands reach, arms reach. And then it's good to have some gold and silver where, if you do need to go, because places are getting locked down right now. And I don't know how you guys, really feel about that. But it's good to have some gold and silver at hand ready to do what you need to do. And then it's good to have gold and silver. A lot of you guys may not agree. A lot of you guys will agree. Out of your jurisdiction, meaning, let's say if you're in Europe, if you're in the U.S., things get really bad because the government is, let's just call it what it is. It's just short of nationalizing everything, by buying everything up, having the central banks buying everything up. If you feel uncomfortable, and I know a lot of you guys are, we're here. You guys can always talk to us about storing overseas. When you look at, let's just say you look at countries, let's say you look at US, let's say you look at Singapore. I would venture to say things in the US are going to get worse. They are going to get worse. Things in Singapore, other places, it's fairly stable. And that's where, you may be looking at, okay, I'm here, things are going to get worse. I need to diversify assets. And what a lot of guys say, diversify the location of assets. So do keep that in mind. Anyway, I'm running over time again. I do wish you guys all the best. You guys take care out there. Again, be a blessing, not a burden. Take care of your families. Be mindful of your social situation when you go out. You don't want to spread virus. You don't want to take home virus. It's a real thing, they may say the death numbers are down, which is true, which is good. But the contagious levels, how contagious the virus is, that's a different story. It's very contagious. And you come down with it, you may be down for a while. You may give it to others. So, be a bit more social responsible. And I will say this because I see this and it's getting to be a pet peeve of mine. If you go out and eat at a food court or something like that, and you're wearing a mask and you take your mask off and you eat, pick up your mask and dispose of it properly, however you see fit. But don't leave it at the table for cleaners to come and pick up. I've been seeing a lot of this. So don't leave your mask at a table and walk away and have someone else clean it up. Take care of your own stuff, right? I don't know why I got into that, but I think you guys are going to see that happen more and more also. So take care of yourself, your own responsibilities, and be a blessing and burden. Help out wherever you can. And again, thanks for stopping by. As always, saddle up for what's coming ahead, and silver up as well. Silver up. You guys take care of each other, and I'll see you next week. God bless.